Hi guys,
Excellent.
I'm Jay, CEO of OKEx. Welcome to OKEx DeFi Roundtable. For those who missed this series before, OKEx DeFi Roundtable is a virtual talk series to invite DeFi projects from various segments to talk about their progress, insights, and future developments. We had a great time with the two top-level DeFi projects last 2 weeks. One is Compound, the other one is MakerDAO. In the last roundtable, Greg, the head of business development of Maker Foundation, explained the relationship between CeFi and DeFi very well, and how Maker is leveraging this in the DeFi game. So today, here we have DeFi Money Market, its co-founder and CTO, Corey Caplan. Corey, we are very happy to have you here today. So could you please introduce yourself and DeFi Money Market as well?
Sure. So thank you for the introduction. As Jay mentioned, I'm Corey Caplan, one of the co-founders and CTO of DMM, or DeFi Money Market. As far as my background, been a software engineer for a number of years now, about 6 or 7 or so. Always been deeply involved in the crypto space as a user, as a trader, as a dApp developer, and really just have a deep passion for everything that the industry stands for. And before DeFi was a coined term, of course. And as DeFi has become more of a thing, it's been really exciting to see the developments that have been going on and across the industry. As for DeFi Money Market, what we're trying to do is bridge real world assets that are revenue producing to on-chain cryptocurrency holders and participants, essentially breaking the current mold of a lot of the things going on in DeFi being very purely on-chain participation. We think that there's a very big potential for collaboration between traditional finance and real-world assets to be brought on-chain to be able to play by the rules that the cryptocurrency space has carved out, which is transparency, trust, parameters and rules that govern protocols that are open, which I'm sure Jay and I will talk more about later, and bring them into this different environment that we all know and love. So in essence, we think that DeFi Money Market has the potential to become the global index for real world assets that produce revenue, produce yield, and the invention of a DAO coming together will also play a very large part in that. So really excited to be here. Thanks again. And this is going to be a lot of fun.
Yeah, excellent. You got quite a good experience. Today, our topic is fill the gaps, decentralizing real-world financial markets. So before drilling further into the ecosystem DMM, can you tell us how you and your team came up with the idea of DeFi Money Market Foundation
Sure.
model?
Yeah, absolutely. So two out of the other 4 co-founders that are not here right now, Greg and Derek, have a lot of experience working in traditional finance and have been early age internet entrepreneurs for since the mid 90s or so. So I'll speak more to Greg's background in particular because his is extremely relevant. You'll see how Derek's comes into it and actually how it comes together.
Right.
So Greg, previously before this, has been the CEO between a joint venture between Telefonica, which is a mobile payment services company, and MasterCard, who a lot of people already are familiar with, essentially to bring mobile payment services to Latin America. For him, he's always been working in a mixture of finance with technology and mixing the two together. He made a portal for, I think it was for real estate back in the late 90s as well, and ended up selling that to Citigroup. More recently, he worked at a company where actually they were doing this exact thing with car equity lines of credit, and were working with a large hedge fund. What actually happened was they ended the relationship with the large hedge fund and found themselves in a situation where they wanted to find new ways to finance these lines of credit that they're working with. So taking a step back, what DeFi Money Market has been doing to initially seed the ecosystem is we've been working with these things called car equity lines of credit, which essentially means if you own your car outright, kind of like a home equity loan, you can get a loan that's taken out against the value of the vehicle and pay it back. And if you fail to pay it back, then the car can get repossessed. So what ended up happening was after they ended that relationship with the hedge fund, they have always been involved in the crypto space. They found it to be something very interesting and up and coming. And Adam and I met with Greg and Derek at a networking event, actually. And we've always just had a very, very solid relationship. We always knew how to communicate well with each other, and they always loved hearing about what's going on with our company and our stuff. We always really enjoyed hearing about theirs. And eventually they had this idea of how we can marry crypto together with traditional finance and what they've been doing. And we saw the opportunity in working with them and thought they were onto something with it. And we found a way to actually bring it into what's now known as DeFi. But at the time, we saw a lot of really popular things come out, like Uniswap, and the idea of pooling liquidity together and using mathematical functions to deal with some potentially complex problems that would otherwise be very difficult to solve if you were trying to do things more peer-to-peer instead of in more of a pooled model. And so with that, we brought this idea together with them and carved it out, spent a lot of time going back to the drawing boards and seeing how we can do it in a way that makes sense, that works in crypto and can still play nicely with traditional finance. And we can bring the thing through a transitionary process where there's training wheels on the bicycle, so to speak, but eventually the training wheels come off and it's fully riding without them. And as they say, I guess the rest is history. It's been a really exciting process so far, and we love the traction that it's gotten so far, and the community has been absolutely tremendous. But at the end of the day, we think that this is really just the beginning, and there's a lot of really exciting things still to come.
Very interesting. It's a fascinating. Cool. The idea sounds interesting, but a little bit complicated. We understand that DMM operates as an ecosystem where real asset owners can tap Ethereum digital asset owners for funding. With this, its interest rate are backed by real world assets. A few days ago, I heard the two Pilatus PC-12 aircraft is to be added to the DMM ecosystem. How does the real world asset collateral differentiate DMM from the other DeFi projects and products?
Yeah, that's a great question. So the big thing that we see ourselves as one puzzle piece in the ecosystem, and we think the other interest earning and borrowing protocols that are out there are absolutely equally as essential as ours. So for us, what we're trying to do is bring stable, uncorrelated yield to the industry. And right now, a lot of the borrowing and lending that's been occurring has been happening purely based on the sentiment of crypto or where there's incentives that are placed right now. Right. So using the example of MakerDAO, predominantly the biggest CDP creators are individuals that are looking to leverage long for Ethereum. So if the sentiment for Ethereum ends up dropping, for example, because people think that the price of Ethereum is going to go down, unfortunately, what we've seen in the past is that it's very difficult for them to incentivize people to create CDPs then. And that's why MakerDAO has been looking to marry traditional finance and other uncorrelated assets into the ecosystem, because sentiment to what people think about Ether or the cryptocurrency space as a whole, which is quite strongly correlated with Ether, can be quite detrimental and quite a problem in some situations. The DSR, or the DAI savings rate, is one such example where initially the interest rate was very high, it was quite juicy, but eventually it came all the way down as soon as they realized that, well, not they realized, but the ecosystem had to vote in less expensive interest rates because people weren't willing to pay that much when the sentiment towards Ether went down. So this is where we think DeFi Money Market can, for example, come to play and play quite nicely, because when the sentiment goes down for the market and therefore people don't want to necessarily pay the interest rates and the interest rates go down, we see ourselves as something that can stay quite stable for 12 to 18 months before new policy potentially needs to come into play. But even before then, we'll be able to predict out quite easily, because at the end of the day, our assets in the backing of the ecosystem is not just backed by assets, but it's contractual relationships that form the glue around the assets. And those contractual relationships tend to extend out 12 to 18 months in term. And therefore, we can predict out quite reliably and stably what our interest rates will be. So variable rate interests are just as important as stable rate interests, and they both play together in different ways. So we think that the stable interest rates are where we come into play and can be quite different.
Okay, it's very interesting, and I think so. For your company, for DMM, it's one of the stable coins, like stable interest rate. and the others is just on the variable interest rate. So that's the main difference. Am I correct?
Yeah, that's the main difference. And the way that we get to our interest rates then also dictate what we're trying to do. So because ours are stable, we needed to tap into um, contracts, which typically means they're in the real world, and we wanted to make sure that it was still over collateralized and responsible, which is how we found ourselves working in this particular asset class or asset classes that are similar.
Okay. Also, what other real world assets would you company be bringing in and for this purpose? And I see you got a vehicle, the cars, and you got an aircraft. Uh, any other other choices, alternatives?
Yes, we think that there's definitely a lot of potential, not just interest, but a lot of viability in real estate as well as aquatic vehicles as well. The big thing is, like I said, sticking to real world assets. That's where our niche is. But the big thing is a lot of these industries that we bring up, like aviation, aircraft, vehicles. These are all potentially very, very, very large industries when it comes to finance.
Mm-hmm.
And what we like to do is, and this is where we have our expertise in, is finding these subsegments of the market. We break down the markets if they're very, very big, and we try to find the smaller pieces inside of there that are the hidden gems that might be smaller in traditional finance, but for crypto, they're very large. So the example I like to go back to, because it's something that's been working very well for us, is the car equity loans or the car equity lines of credit, as I just mentioned earlier, which are the vehicles. And we'll see this very, very similar with aviation aircraft when our DAO votes it into effect, actually. But the example then with the cars is, subprime loans and just car lending in general is a very large market in the hundreds of billions in the U.S. In the U.S. alone, let alone on a worldwide basis. When it comes to the car equity lines of credit are actually a subsegment of the market. They're quite small, usually in the small tens of billions of dollar range. So in traditional finance, it's very small. Typically, you don't allocate a lot of resources to it because of the size. But when it comes to crypto, tens of billions of dollars is a lot of money. And it's a lot of money to make a very, very large impact. So we think that we have a lot of potential to find these smaller subsegments that are low risk, high yield, potentially these hidden gems, so to speak, that can make a very big difference to the crypto industry and grow it beyond just the pure crypto thing that we see going on right now and really start to bridge it into the real world.
Okay. Did I hear you mention the real estate? Real estate would be more stable than vehicle and aircraft?
Potentially. So, I mean, all these assets that I mentioned, real estate being one of them, brings new deal flow and a new layer of diversification to the ecosystem. But one of the things that we really like to be careful of is we don't just look at what happens when everything works nicely. We also like to look at what happens when default comes into play, when people pay back these contractual relationships that essentially underpin the ecosystem. So going back to cars, for example, it's very easy and lawful for us to repossess them. And the process for doing so is quite quick and seamless and not costly. The process for doing this for real estate is quite different. It depends on the jurisdiction, depends on the type of real estate that it is, whether it's an apartment complex versus a residential home. And so with that, we're really trying to mix and match the different risk that is associated with bringing on these different asset classes. And we want to have the DAO essentially vote in intelligently these different things then, depending on where the interest lies. So at the end of the day, we think that our role as the foundation is to essentially serve as the training wheels for the overall ecosystem and initially bring this deal flow in. But eventually we think that there'll be key participants beyond us that will be bringing the deal flow in and actually having the DAO itself effectively vote in these assets then.
Right. Okay. That's very good. I see. Let's move to the next question. How does the governance token, DMG, act as a core tool in DMM DAO's governance structure? And anything special compared with the other similar DeFi governance tokens?
Yeah, absolutely. So for us, the DMG governance token, talking about it more simply at first, we see it as the glue that essentially binds the entire ecosystem together to align incentives and bring key participants together. So on a very core front, it's very simple to say that those individuals could be protocol developers, could be community members, could be marketers and things of that nature that will help grow the ecosystem out. But the bigger thing that's in play here is we need to make sure that we're constantly bringing in real world assets and key participants from different jurisdictions that help with the tokenization process, the origination process of loans, and things of that nature. So for right now, in a more microscopic use case, we're working with a loan servicer to actually deal with the vehicles that we have onboarded. And they can charge a slight origination fee and a handling fee on it, which comes out of the revenue for the DAO. And the DAO is essentially the culmination of all these DMG holders then. And DAO stands for Decentralized Autonomous Organization. Mm-hmm. It's autonomous because a lot of the things that the organization does is effectuated and brought into reality by them voting on things. And the voting actually propagates into different actions occurring. But the main thing actually being that beyond the usual participants you see in these kind of ecosystems, we actually have these things called principals and affiliates, which essentially serve as the bridge or bridges from different jurisdictions for bringing on real world assets. So if you were to compare this to traditional finance, in traditional finance, this could be like an investment bank that's responsible for originating and dealing with the overall loans that are occurring. So in the real world, you would compare this to like a very large investment bank dealing with very large mortgage bonds, which are composed of hundreds, if not thousands, of tiny mortgages. So for us, we see these principals and affiliates being the larger members that are holding a solid chunk percentage of DMG, and they're responsible for the origination and overall handling of assets being onboarded from different jurisdictions, and they get paid additional origination fees on top of this then. So they're a very large key stakeholder in our DAO, along with other usual participants that you'd see in other ecosystems. So if you, going back to your original question of how you see DMG and its governance being potentially very different, it's that we have those key participants that I keep mentioning of the principals and affiliates being responsible for the onboarding of real world assets. Mm-hmm. But then there's also the element of we need to effectuate on-chain participation and voting that occurs on the blockchain to real world actions that occur. And this actually stems from our partnership and close collaboration with Chainlink, which I'm sure that I'll dive into a bit more as we talk more about the technology and where this is going.
Yeah, that's right. That's very good. Since the DMM and its token are unique, we decided to list DMG on OKEx last week. Besides the listing, what do you expect that the centralized players like us in the crypto space to do more to facilitate the DeFi space?
Yeah, this is a great question because the reason why we decided to work with OKEx in the first place is because we thought that the collaboration can go very far beyond just listing DMG, and your team very happily showed a lot of excitement for things as well. So we see participants like yourselves being stakeholders in DMG and actually participating in the voting, because we see you as a very strong onboarder for participants in the ecosystem actually to get involved. Right. So with that, like right now we offer M tokens, which are M wrappers around traditional assets, which offer 6.25% interest, which is the interest that underpins our ecosystem and actually offers the yield to our end consumers. So if you come to our ecosystem with USDC, DAI, or ETH as of right now, but potentially more assets in the future, like the stable coin that's offered by your exchange, which could get onboarded, and we've talked to them actually about, we actually will spit out an M wrapper for it. So M USDC, M DAI, M REITH, or potentially M OKB, or M USDK, which could be, which are essentially tokens that offer the 6.25% interest on the original deposit plus the principal then. And we think that there's a lot of potential for exchanges to list the asset and actually offer it as like a staking mechanism, where if you decide to stake your tokens like your ETH or your OKB, you can actually earn the interest then. And behind the scenes, that interest is actually offered by everything okay?
Yeah, it's all good. It's all good.
Okay. No problem. Yeah, so that interest then would be offered through the exchange actually, but behind the scenes they'd be working with the DMM protocol to actually offer the interest then. And what's really nice about the protocol is that it's offered in token format, so it mixes in very nicely with the treasury management of your exchange, because you can actually move the tokens around from hot wallets to cold wallets, etc. And there's no necessary changes then, because at the end of the day, it's just an ERC20 token. So there's that. We also think that there's potential for individuals to hold their DMG on OKEx and still be able to vote on different proposals that are occurring as well. So we think that there's a lot of potential for collaboration. And the third thing, which is a bit more advanced, which we think will come further down the road, is we have this concept of a debt ceiling in our ecosystem, because whenever we offer interest, it needs to be backed by real world assets.
Right.
And our smart contract ecosystem, which is what DMG governs, necessitates that we keep our ecosystem over collateralized. And with that, we have this thing called a debt ceiling in place, which enforces that we never actually lend out more assets than we actually have backing the ecosystem then. So if there was, for example, $100 million worth of demand for our M tokens, but our debt ceiling is only at 10 million, that would mean that there's a $90 million surplus or excess of demand. And that would pour over into secondary market trading then for M tokens then, which we think is a very important thing, because coming to our smart contracts is more of the primary market. But going to professional venues like OKEx would be a secondary market venue to trade for M tokens and at a premium when we have a liquidity crunch, for example, for them, because there's excess demand.
Oh, that's very good. That's a very good concept. I really like it. Well, let's move to the tech side.
Awesome.
As I think I can't wait to get into this part. What role does the Chainlink decentralized Oracle framework take to help DMM maintain a fully collateralized, transparent, and trust minimized money market?
Yeah, so with Chainlink, there's 4 key areas of participation from them. And I'll start with the simple ones and start to dive into it a bit more then with it. So the first is when measuring collateralization, we need a common means of calculation for it. So for us, we use the US dollar for it, but in other countries we could have used another one as well, like the Chinese yuan. But so right now with the cryptocurrency that we're holding on hand, we use their price feeds on chain in order to calculate how much the crypto is actually worth for once. We can measure what we have in deposits. And then going one layer deeper, all the collateral that we have right now in the cars, we're actually sourcing data from Blackbook, and Chainlink is working with us to actually bring that data on chain. And essentially what they're doing is they're taking the data from Blackbook and sanitizing it with each of the 912 or so vehicles we have sitting in the pool, and they're attributing a value to them. So we can actually measure how much and real world assets we actually have helping with backing the ecosystem then. So that's another big one right there. And then the other 2 big things actually relate back to governance then. So at the end of the day, we have a protocol that exists on chain, and if on chain and real world assets, it would definitely simplify things. But at the end of the day, we really see ourselves as a cool protocol that is trying to bridge real world assets into a blockchain environment, which is potentially a very messy and difficult thing to do, especially for those that are more technically minded, that understand the Oracle problems that can come from that.
Right.
So for us, Chainlink is the best solution out there as an Oracle provider in order to do independent actions that need to reflect the best interest or the interest of the DAO that can be voted on in order to effectuate them or materialize them in the real world. So other things that we're working on with them is twofold. So the first is the money that flows into the DMM ecosystem. It first comes in crypto, of course, and we're always going to be keeping a good amount of crypto on hand, and our smart contracts actually dictate how much we need to keep in there so we can't cheat the system. And then there's always going to be a portion that flows into real world assets then. And there might be a couple-day period where money is in transit from crypto to those assets. And during that period, it could be in crypto or it could be in fiat in transition. Chainlink can help us in actually tracking that money then, so that the ecosystem participants can always be comfortable seeing where the money is actually flowing to when it's not allocated into a real world asset or it's not sitting in the DMM smart contracts directly. which is quite important. And that's the third thing. The fourth thing, which is, in my opinion, the coolest, and this is where we're doing a lot of the research and development with them, is with the actual DAO, or where DMG comes into play. So if you imagine an ecosystem where all the DMG holders are coming together to vote on something, let's say they're going to vote on onboarding the new asset, which in this case is the PC-12 aircrafts we talked about.
Right.
So our article about that doesn't actually bring the aircraft in. We're just doing what we think is our core responsibility right now, which is presenting new deal flow to the DAO as one of the things that we can do to help it for the time being. But at the end of the day, it's up to the DAO or the DMG holders to vote it into existence. So when the DMG holders vote it into existence and they want to bring it on, there'll be some smart contracts and some technical things that need to happen. But beyond that, we think that the Chainlink oracles can actually read the outcome of a vote actually on chain and actually propagate that to do real world actions then. And in the most simplest of terms, it could be something like, based upon the voting outcome, send an API call to our bank account that can move funds from one bank to another to pay a loan servicer in order to kick off the process of actually bringing on the PC-12 aircrafts. It could be very comprehensive things like that. But without a strong independent oracle solution like Chainlink, doing that independent action I just described of potentially making an API call to a bank account that moves funds around is inherently not trustless anymore. And it actually circumvents the entire purpose of us running this as a DAO. By essentially moving a lot of that real world action then to Chainlink, we're actually further decentralizing the process and moving it to an independent party that actually moves us as being hands off. So in the traditional world, what this would look like then instead, if we didn't have something like Chainlink, it would be the DMG holders vote on something, and then the DMM Foundation does the action based upon whatever the vote was. But there's no one actually forcing us to take that action. So if the proposal said that got voted into existence said, do not onboard the PC-12 aircraft, but we were responsible for doing that at the end of the day, the DMM Foundation, we could just say, oh, we don't agree with the vote, we don't like what they voted on, and we could just go ahead and do it anyway. But that's not what the DAO actually voted on, which is obviously what reflects what the voting and participation leans towards. So by using Chainlink for this, instead of another party to manually do it, Chainlink could be the independent party to do that. And then we, the DMM Foundation, would not be able to circumvent that in any way. It would just be what they do is reflects the actions of the proposal and the voting of the DAO. And there wouldn't be any way for us to cheat the system or go around it. It is what it is, and we have to deal with the outcome of the vote, and that's what's most fair. So we think that this is really going to bring on a new age of DAOs that can now participate and do real world actions, and we think that we can help exemplify this new technology.
That's really good. I really like it. So Chainlink has become a reliable partner with loads of DeFi projects on pricing Oracle integrations. We might say DeFi is one of the big highlights in the space this year, besides the third Bitcoin halving. The market cap of the top DeFi projects have been surging for months. Even the daily trading volume of some DEX was higher than those centralized exchanges a few days ago. It looks like it will keep going upwards. So, Corey, any predictions towards yield farming and the world, not the world, the whole DeFi industry for the rest of 2020? And will DMM give a special gift to the community?
Yeah. So starting with the first part of the question, I think that yield farming was just one strong use case for these protocols to progress the industry forward. I mean, we saw this with 2017 with a lot of the ICOs that happened. Projects were using tokens and ecosystem tokens as a way to incentivize core participants to do a certain action. So in this case, we saw yield farming as a way to incentivize individuals to participate in an ecosystem and really grow the protocol significantly. And I think that's one of the biggest reasons why they grew as much as they did. Now with it, I think that the user experience, which is probably one of the biggest hindrances of DeFi growing before this, has started to get broken. And I think that when you see yield farming as a way to incentivize ecosystem participants, I think that we're starting to see a lot of new money flow into DeFi, not the same money being respent all over again, which is a potentially very good sign. And I think that what we're seeing is the incentives are very, very large, which of course incentivizes new people to join in. And when those new people join in and they see that the experience is not as hard or not as bad as what they originally thought, I think that we see the ecosystem grow a lot more organically. I think the pre notion a lot of people had was that using DeFi products is very difficult, very confusing. It seems like it's magic. You don't understand how it works. But then once you actually start to use it, it's not that bad. I mean, the same can be said for crypto trading in general until users, for example, go sign up for an exchange account in OKEx and they realize how easy it is to go ahead and trade then. And surely it's like one of those things where the journey of 1,000 miles begins with a single step. And once they take the first step, they actually realize that it's actually a lot easier than they originally thought. So, so going to the second part of the question with DMM potentially offering a special gift to the ecosystem. Yes, we're definitely actually looking to perform some sort of yield farming. We actually just have it, finished wrapping up the blueprints for it in an internal meeting recently. So our roadmap for it is actually we're looking to roll out the governance dashboard shortly and bring on the first initial voting for a couple really important things like onboarding the PC-12 aircraft and new potential assets and crypto assets that can earn interest. And then we think that that yield farming will be an important next step for that because we really want to grow the participation of the ecosystem participants. And so that participation can happen from purely on-chain individuals that are decentralized aficionados and people that are very professional or understand the space well. But then to other individuals that are not as familiar with it, we think that our partnership with OKEx could be a very, very strong movement in that direction where OKEx could offer M token interest rates to the end users, as well as potentially DMG voting and other things like that in the future, which would be very exciting.
Yeah, I'm just as positive as yours. Let's go to the final question here. Could you please suggest one word to describe the future of DeFi and why?
I think that word would be exhilarating, because I think that for a lot of individuals that originally got into this ecosystem or the cryptocurrency space as a whole, a lot of us came in because we heard this story about how this technology can displace banks, or it could offer financial resources to those that didn't have it before, or offer better financial resources to those that didn't previously have access to it. Or they like the idea of being able to track where money is at all times, like these protocols and these exchanges and things of that nature. And the reason why I say exhilarating is because I think that we're going to see a lot of growth for the overall industry. And I think that DeFi is going to be one of the biggest catalysts for it because it's a very, very strong use case for the industry. I think that games that are built up on top of the blockchain and other things of that nature are very important, and I think that are very cool. But at the end of the day, I think that the movement of finance into here is the biggest play for the time being, and one of the most important ones. Because the monetary system, as we've seen, has become very, very complicated, in some cases very corrupt, in some cases exclusive, where only certain people can get access to things. But DeFi has been this tremendous equalizer so far that has allowed anyone to get involved, anyone to see what's going on, and anyone to be able to get access to things that they previously didn't have access to. And I think that for those that have been in the industry for a long time, it's going to be the movement to newer highs that we haven't seen that we're all excited for. For those individuals that are looking for better financial freedom and are having a difficulty with finding it, I think that they'll have a lot of homage in moving into the DeFi space. And for those people like Jay and I that are helping build protocols right now that are starting to achieve a lot of adoption, I think it's going to be a lot of fun for us to be able to help onboard the next wave of participants into the ecosystem. So I think that it doesn't matter who you're looking at or who you're talking to. If you're in this industry, I think it's going to be a lot of fun. It can be quite exhilarating.
That's very good. Let's just recap the whole session. So we talked about filling the gaps decentralized real-world financial markets. We talk about the Oracle system, which is very important to DMM and actually for DeFi, because it really bridges between the outside world to the blockchain, and also we talk about the DeFi. Actually, it's has financial inclusion and mass adoption and all that. It's very beneficial for the world, and so I guess it's that's why it's so hard right now. It's I think it's going to be the future, just like Bitcoin is. Thank you very much for your time, Corey, and it's really nice to have you here, and I hope we can have you again in the future sessions, and looking forward to any more collaboration with your company.
Yeah. Thank you again for having me. It's been a true pleasure, and I'm really looking forward to continuing to work with OKEx and potentially be on another call like this in the future and have another discussion. It'd be nice to do a recap a couple months from now, or maybe even early 2021, to be able to see like what happened and where our predictions off and whatnot. It'd be a lot of fun.
Yeah, absolutely. I think I wish you the best, the success of your company and you.
Thank you. Same to you.
Yeah. Well, yeah. Hope to have further discussion with you later. Okay, let's wrap it up then. Have a nice day, and
thank you. Same to you.
Yeah, stay safe in New Jersey.
Likewise.